Handling market volatility is something I personally struggle with. I'm a worrier. I only allow myself to check my retirement accounts once a month. Otherwise, I would obsess. If the balances have dropped from the previous month, my heart sinks into my stomach and I feel sick. This is something that I'm working on, and I am getting better at handling it. I thought I'd share what I've learned and what helps me. We've had a roller coaster in the market in the last few years. I think I became more consumed with it a few years ago because I knew I wanted to retire soon. Since it's an election year and the Fed is cutting interest rates, it's quite possible we'll have some market volatility. As the Fed rate drops, the interest rates for high-yield savings and CDs and things like that will drop too. And we just never know what the market's going to do. I'm trying to prepare myself emotionally for how this all pans out. People really can grieve over money. Any kind of loss, real or imagined, can trigger grief reactions. We can grieve by losses brought on by the economy, particularly if it affects important milestones like retirement. We can experience shock, fear, regret, and anger. One of the biggest challenges of market volatility is dealing with the emotions, particularly fear. So here's tip number 1. The best defense for your emotions is an asset allocation that helps you sleep at night. This is the reason I use the bucket strategy. It may not be the strategy that makes me the most money possible, but it does allow me to sleep at night and to be happy. I also won't be panic selling at a loss. Financial loss does happen, and you can feel like there's no coming back from it. You probably remember stories of investors jumping out of windows during the 1929 stock market crash. When dealing with financial loss or instability, many people suppress the negative emotions that come with it. That's stuffing your feelings, and that can come back to bite you. Stress can easily turn into relationship problems. You can end up taking out your frustrations on your friends and family. Your personal relationships and your health can suffer. Stress is huge when it comes to declining health. It's important to be aware of how your financial fears and losses are affecting your physical, mental, and emotional well-being. You can reach all the financial goals in the world, but they won't mean anything if your health suffers. So tip number 2 is concentrate on self-care and prioritizing your health. You can manage stress through breathing, meditation, sleeping more, exercising, spending time doing things you love, and being with the people that make you happy. History has shown that no matter what challenges the economy has faced, markets do eventually recover from downturns. And they go on to bring good returns in the long run. So tip number 3 is to leave your money invested in the stock market, at least a portion of it. You'll increase the chances of it growing and building your nest egg. For me, I have to put aggressive funds or stocks in bucket number 3. That way I know if there's a crash, I won't need that money for 10 years or more. So it has time to bounce back. If you want to outpace inflation, you have to take some risk in your portfolio. You need to have some money in stocks, but be realistic with yourself about how much risk you're willing to take. I probably have a much more conservative portfolio than a lot of people. But it's right for me. It's the amount of risk I'm willing to take now that I'm retired. If financial loss does happen to you from a market crash, bad investment, or even a scam, accept your grief about what you lost. It really is a loss. Don't minimize it. Tip number 4 is to accept your emotions and the fact that you've experienced financial loss. Talk to people you trust, your friends and family, or your support team. Have them around as you would if you lost a loved one. Talk about your feelings. You don't have to talk about the financial specifics, just how you feel about it. This is an important way for you to process your grief, and it really is grief. Also, remind yourself that you've made it through other challenges in life. When you're faced with a loss, it can seem like the worst thing that's ever happened to you. But you've experienced many difficulties in your life and you made it through those. Tip number 5 is it might be helpful to tune out social media a little bit. Some of the finance and investment personalities can be pretty doom and gloom. I got caught up watching a YouTube channel for a while that was very doom and gloom. It was depressing. Some people sensationalize news and give opinions, not facts. It's easy to get caught up when the markets are volatile and emotions are running high. If you find yourself panicking and absorbed in social media, consider taking a breather from it. Stepping away from the flashing headlines can help you think more clearly and objectively about your investment portfolio. Making rational decisions based on unbiased evidence is the best way to survive market volatility. Volatility really gets our emotions going. It's great when the markets are going up, but as soon as they start to take a turn, doubt starts to creep in. This roller coaster effect can mess with our emotions and cause a lot of stress. The best way to overcome this is to act slow. Make sure the decisions you're making are not being driven by emotion. Put some distance between yourself and the sell button. Our gut reaction when we see stocks dropping is to sell. Sell everything, save what you can, get out, run. All you can think about is how much money you could lose. I'll admit this is the commentary in my head at every big dip in the market. Staying the course can be hard when you see your net worth falling. Keeping your emotions under control and staying calm is important. Maintain a long-term perspective. And remember that market downturns are part of the natural cycle. Market crashes and volatility always feel worse than they really are. Building wealth is a long-term game. The better prepared you are for your emotions, the better you can manage them. I hope this helps you think about ways to manage your emotions during market volatility. I have to constantly remind myself it'll be okay and I can handle this. You might even want to bookmark this video so you can find it during times of market volatility. If you're new to my channel, hi, I'm Julie and this channel's Happy on Monday. Thanks for joining me. If you found this helpful, please like. And if you're interested in retiring early, consider subscribing. I'm going to leave you with a quote. Nothing is permanent. Don't stress too much because no matter how bad the situation is, it'll change. Hope to see you again soon.